Hello, welcome to the weekly technical analysis review for Tuesday, December the 4th. I'm Rafi Boyajian, currency analyst at XM.com. The pairs we're going to look at for this week are the Euro Pound, the Dollar CAD, and gold. Starting first with Euro Pound, we can see that the near-term bias for the pair is bullish. RSI is in positive territory. The MACD is rising and above its signal line. Though there is some easing of that upside momentum today. RSI is sloping downwards at the moment. There is strong resistance coming from the 61.8% Fibonacci retracement of the downleg from 0.9098 to 0.8655. So that 61.88% Fibonacci is around 0.8930. If we were to see a successful break above that level, we could then see the 0.90 handle coming into range, and then above that, gold prices would then be able to re-challenge that 11 months high of 0.9098, and we could then see a shift of the medium-term picture to a more bullish one. However, if that resistance level holds, we could then see prices slipping downwards. First at 0.8875, that's the 50% Fibonacci. A drop below the 50% Fibonacci would significantly weaken the positive momentum. And then we've got another key support level further down at 0.8825. That's the 38.2% Fibonacci. And it's also where the 50 and 200-day moving averages are currently converging. Dropping below that level, we could see the downside pressures increasing, and then the Euro Pound could then head back towards that 11-month low of 0.8655 that we saw earlier this month. Let's now turn our attention to USDCAD. So earlier this week we saw the pair breaking below the ascending trend line. There is support coming though at the moment from the 61.8% Fibonacci of the downleg from 1.3385 to 1.2781. If that support level fails to hold, we could then see the pair drifting further downwards to another support area that's around 1.3083. That's the 50% Fibonacci, and has been a previous support and resistance area. So a drop below that support region would significantly weaken the bullish short to medium term picture, and that we could see a return to a neutral mode. And then further down we've got the 38.2% Fibonacci at 1.3012. That's just above the 200-day moving average. However, if we were to see an upside reversal, which isn't looking very likely in the very short term because the stochastics are still pointing downwards, the MACD histogram has slipped below its red signal line, but if we were to see a bit of a bounce outwards, resistance should first come at the 78.6% Fibonacci at 1.3256. That's also near the ascending trend line. Breaking above that region, we could then see the 1.33 handle coming into scope, and then a break above that would put the pair back near towards that 5 months high 1.3359, and then the pair would be able to resume that uptrend. And finally, having a look at gold prices, we can see gold has been steadily recovering from those 1.5-year lows of 1,160 from back in August. It has been moving in ranges, though the current range is between 1,295 and 1,240. Prices are currently hovering near the top of that range at 1,240, which is the 38.2% Fibonacci retracement of that long-term downlength from 1,365 to 1,160. If we were to see a successful daily close above that resistance level, we could then see the pair making run towards the 50% Fibonacci at 1,263, and that would also signal a shift to more bullish outlook in the medium to long term as well. However, if that resistance level holds, we could see gold slipping back towards 1,228. That area has been congested in the past. Further down, could see gold drifting back inside the Ichimoku cloud, turning the short-term picture back to a neutral one. And then we've got a key support area at the bottom of the cloud and between the 23.6% Fibonacci around 1,210. Drop below 1,210, we could then see gold heading towards the bottom of the current range at 1,295, and then slipping further below that would shift gold back into more bearish outlook. That's it from me. Thank you very much for watching, and have a great day.